Well, thanks so much for joining us here on the Market Day Report. I'm Marlon Bowling with you, and we're going to be kicking off a whole new trading week here with a little extra help with some resident experts that we love to work with. We have Rich Nelson on the line right now from Allendale, Incorporated in McHenry, Illinois. So, Rich, thank you for joining us today. Interesting stuff. I saw a little firmer tone in the grain market overnight, and we can kind of show some of the prices here as the corn and soybean markets have rallied overnight. But from what I understand, a lot of that, for example, we're showing corn about 2 higher on the May contract on that Globex trade at 359. Soybean trade had fairly big gains overnight, 7 higher on the May at 958. The wheat trade in Chicago and Kansas City was higher overnight, not so much in Minneapolis, but May Chicago wheat up 2 3/4 on the Globex trade at 407 3/4 per bushel. Kansas City wheat, we had the May contract up 3 at 407 1/2. And on the Minneapolis, here we have the May contract just fractionally higher, up 3/4 and 527 1/4. However, that new crop July contract up a couple of cents. Now, Rich, from what I understand, a lot of this support is coming from a U.S. dollar that really tanked overnight. When I came into work, it was down about 1,000 points. Right now, we're down 940 points at 98.940. And some of the analysts that I've been speaking with this morning said this is all kind of tied into that French election. So explain the correlation between the voters in France and our grain markets going higher because the dollar is going lower. Can you tie that all together for us?
You know, I can't make it nice and clean at all. In terms of big picture issues, this week is going to be interesting as far as outside market discussion points, like you mentioned, the French election, pushing this dollar down a little bit more than people were even considering as far as today's discussion. We could see this trade basically say, hey, this French election issue could be something which maybe upends a few of the traditional U.S.-EU relations. Perhaps maybe for us, maybe on the negative side is maybe one discussion point they're kind of looking at. In addition, we also have our potential health care legislation this week as well. And heck, we're also talking about tax cut here in the U.S. as well. So we have the French election as well as 2 big issues looming here ahead this week also to help maybe pressure U.S. dollar, or, if they pass with some good support, perhaps even supporting U.S. dollar by the end of this week here too.
Rich, Tim Ross was just showing our precip map, the expected precip this week, and he's drawing a lot of rain right over the western half of the Corn Belt. That has to be concerning to a lot of corn producers out there. Is that part of what's supporting the corn market today?
There's no doubt. With this maybe southern and central half of the Midwest here favored with a little extra rain this week, that's one thing. And heck, even look over at next week's forecast. Next week has kind of changed a little bit here now, maybe a little cooler than expected, as well as maybe normal to above normal precip. So that, the outside market issues here, plus our maybe discussions here on the grain side, suggesting a valid minor rebound here for this week.
Sounds like the Argentine soybean harvest is about 21% complete now. But given the fact that we were just talking about the rain impacting the Corn Belt here, and that could shift some corn planting back a little bit and maybe cause a few additional soybean acres, how is it that the soybean prices are so much higher this morning? That seems counterintuitive there.
It does. I think for right now, the trade is more or less discounting that traditional corn planting problems equals more soybean acres. I think maybe right now they're saying that it's going to take a decent price move, maybe instead of a seasonal planting discussion point, to actually change acres for this particular year. So I think that's their issue right now. That is more of a price issue on soybeans and not really a planting delay issue as far as the acreage discussion.
All right. Well, Rich, sit tight here for a moment if you don't mind, and we'll talk about our livestock trade when we come back. Our guest, Rich Nelson of Allendale Incorporated. We'll be back with more with Rich right after this. Well, we're back with you. We're talking with Rich Nelson of Allendale Incorporated in McHenry, Illinois. We're talking about our livestock sector this time around. And Rich, as everybody went home for the weekend last week, we got a cattle on feed report from USDA. We can take a look at those numbers, and I wanted to get your thoughts on what that may mean for the trade. It seemed like the market heading into the weekend was narrowly mixed on the cattle market. And on the on-feed report that came out, they show on-feed as of April 1st to be exactly 100%. of what we had a year ago. So nothing really changed. The trade was looking for maybe 98.7 to 100.5, so toward the upper end of the range of estimates there, but within the range. Placements at 111% of a year ago, they were above the range of estimates. They ran from 101 to as much as 109.5, but it was well outside that number. The marketings in March, 110% of a year ago, and that was right at the top end of the range of estimates. Traders were looking for 108.1 to as much as 110%, so it was right at the upper end. So on the surface, how would you read the numbers as they came out from USDA and what they may mean for the open here this morning?
You know, in terms of the plain immediate impact, or I should say, price discussion point, you know, this is a bearish report for us. That 111 here on the placement side was clearly over the trade's estimate of maybe a 6 to 7% increase. Really important for us, that March placement number was the largest ever since the current data series started in 1996. So that's a little bearish. Also, throw more on top of this pile. The past 5 months, we've seen placements average 10.5% over last year. So this report tells us we still have a valid tight supply market right now for the short-term market, but we do have quite a few numbers waiting for us here hitting in the late summer and early fall time frame to deal with in the future.
So we had the cash cattle market that developed on Friday, and it was kind of a light cleanup trade, I guess you would call it. But from the time I left a week ago till I got back, it looked like that market has been higher by a good $5 to $7, I believe.
That's exactly right. We still have some just an avalanche of evidence showing that we still have some good U.S. demand, good export demand, even before the discussions on the China beef deal that's currently being pushed here. And also we have a very tight feedlot situation. Those weight numbers we talked about here on Friday morning, they came out Thursday. That also confirms very tight supply and still a right now bullish situation. So for today's trade, we might start off a little bit lower, but you know we might not even end here on a down note today, surprisingly. So we'll see what happens as far as today's futures trade.
This morning when I came into work, I was looking at a June lean hog chart, and on that chart, it just seems like it continues that waterfall pattern, and it continues to push the downward side of the trading ranges here. It looks to me like on the June, maybe the only support left would be the contract low that would be, if I recall, maybe $1.90 below where we are now. What do you think of that?
That's right. You go back to that September 30th price, I believe that was, and in terms of that, 66.40 on the June contract is the point you're talking about. And in terms of the negative near-term issue, you know, we talked about this seasonal, which suggests by mid-April you usually have a changing market here. Some people suggested that with this year's later Easter than last year, for instance, maybe that was an issue in causing this delay in the seasonal rebound. But bottom line for us, we certainly suggest that with an open kill week now, in other words, no slaughter delays at the packing plants as far as holiday issues, we should see some support, maybe not an uptrend here developed this week, but at least support and getting a bottom hammered out at some point on this cash hog issue.
And it will be critical to see if that support level holds or not, or then it's Katie bar the door, I guess, if it doesn't hold, right?
That's exactly right here.
All right. Rich, good to visit with you. Thank you so much. Appreciate it. Rich Nelson with Allendale Incorporated in McHenry, Illinois. And Christina will be talking more with the Allendale folks all morning long.
All right. Thanks, Marlon.
You bet.
Glad to have you back.
Oh, thank you.